We're news for business people.
Hello and welcome to Bloomberg Went Live, and you're watching Trend Spotting. I'm Navneet D'Souza.
Hi Navneet, I'm Agam, and in the next 30 minutes, we deep dive into specific trends in the markets to draw out key takeaways and its implications for investors. But first, the headlines. Indian markets trade lower as investors take a cue from global peers. And Glenmark is down nearly 3% after the US FDA makes 7 observations in its Baddi plant. And Bharat 22 exchange-traded fund trades higher after listing at 36.3 on the Bombay Stock Exchange. And Ivanka Trump arrives in Hyderabad to participate in the Global Entrepreneurship Summit being hosted in India for the first time ever.
All right, let's take a look as to what's happening in the markets. Well, this is the expiry week, so you can definitely expect some bit of volatility as we saw in that last hour of trade yesterday. So far, the trade's panning out to be, it's been trading in a narrow range so far. Nifty is just about at 10,382. We did see it slipping into the green very briefly. Then once again, there was a bit of selling pressure. Bank Nifty has been outperforming, but currently still trading in the red with cuts of almost 6 points. 25,886 is the level where Bank Nifty is trading. Let's just pull up the India VIX. That's going to be in focus this week. It did open with some bit of cuts in the morning session, but currently VIX is just about trading in the green. Most importantly, it's trading above the mark of 3. In terms of sectoral indices, you've got the Nifty Metals Index, which is outperforming. Besides that, the Nifty Media Index has also seen some bit of gains coming about. And if you look at the constituents of both these indices, Jindal Steel and Power is the outperformer when it comes to the Metal Index. And from the Media Index, you've got stocks like Eros International and also stocks like TV Today, which have seen some bit of green tick in today's trade. Let's also look at the market breadth, which so far has been in favor of the advances, and that's precisely got to do with the broader markets which are outperforming the benchmark indices. That's the NSE stats there on your screen, clearly indicating that advances are more than declines in today's trade. Let's just pull up the Nifty contributors list then and see which are the stocks which are contributing and which are the stocks which are capping the moves in today's trade. Clearly, HDFC and HDFC Bank, both the heavyweights which have almost 15% weightage on the index, are contributing the most. And besides that, you've also got IndusInd Bank and Maruti Suzuki, which are trading in the green. Heavyweights like Reliance Industries, ITC, ICICI Bank and Infosys, all of them have been trading in the red, and they are the ones which are capping the moves on the index. Well, from the broader markets front, Agam, they are outperforming. Are there any specific stocks that are, in focus today?
Certainly, Navneet. There's Texmaco Rail, which is moved up as much as well over 8%, so substantial gains coming in there. And we have Religare Enterprises looking at a little bit of U-turn. Do remember that Religare Enterprises has been extremely weak over the past 1 month or so, and we're looking at about 8.4% gain even in today's day of trade. BIP Industries continuing and moving from strength to strength, up as much as 7.4% today, and Rallis India following along with IFB Industries as well. Both these stocks are moving up as much as anywhere between 5.5 to 6%. On the losing end, however, we once again have the Anil Ambani stocks, showing some amount of weakness. So Reliance Naval is down as much as 4.7%. Reliance Communications also down 4%. Aditya Birla Fashion is showing some amount of weakness today, so down 4.4%, followed by Lakshmi Vilas Bank. But once again, at least when it comes to the momentum, when you consider the price action as well as volumes, Navneet, it's towards the advances.
Okay, that's about the markets. But on Trend Spotting today, we discuss the road ahead for Navneet Education as we connect with the managing director of the company, Gnanesh Gala. We put the spotlight on paper stocks and discuss what's creating the buzz. We connect with M.L.Pachisia of Orient Paper. And we also discuss the impact of rubber price volatility on tire companies as we connect with Mr. Ashwin Patil of LKP Securities. On to our first trend of the day. Navneet Education has clocked gains of almost 10% in the last 5 trading sessions. The stock has also advanced over 50% so far in this year. The counter did see a flat September quarter this time around, with an 11% dip coming in its bottom line numbers. What does the road ahead for the company look like? To answer this and to discuss the growth outlook for Navneet Education, joining us now on the show is the Managing Director of the company, Mr. Gnanesh. Gala. Mr. Gala, good morning to you and appreciate you joining us today on Bloomberg Quint. My first question is, your publishing business, there's been a 10% growth which one saw in the first half of this financial year. Quarter 2 is seasonally subdued for a company like yours. Just want to check, how does the second half look like? Can we expect a double-digit growth?
Yes, so overall though in the first 2 quarters we have completed around 70% of our revenue for the full year. So to grow in double digit, it means we need to really grow excellently well in next 2 quarters. Having said that, I still believe that we are aiming at around 12 to 13% growth for the current year.
Okay, Mr. Gala, we were expecting some spillover of revenues owing to the delay in publishing of the Standard 9 textbooks by the Maharashtra board. How much of that has panned out in the second quarter?
Yeah, so second quarter on account of that, lots of revenue did come. But I would say we have not been able to publish all the titles that should have come. Many of the textbooks did come in the month of August also. So very fag end of the September also we launched a couple of products, the results of which we are seeing in the third quarter. So overall we believe the momentum which had slowed down because of unavailability of the products when the schools reopen, that will be now throughout the year. And the other thing that I should tell you here, that since we did not come out with the titles in time when schools reopened, the parents or the students did not thereafter bought the products as and when it came. So we are seeing even third and fourth quarter during the exams also, students and parents will continue to buy. And therefore, I am quite optimistic about growth of 12 to 13%.
All right, so looking at a growth of 12 to 13%, but let's also talk about your export business. Could you tell us the revenue breakup from there and what are the prospects from the export markets?
Yeah, so normally we export stationery products. Now, as far as our total revenue is concerned, that contributes nearly 24-25% of our revenue. This year, particularly because of the rupee appreciation, 2 things happened. The orders that we were expecting to get at the appreciated value rupee, we could not get enough. And secondly, the margins on the supplied products or revenue that we generated also reduced again because of the rupee appreciation. So as far as exports are concerned, we may be able to we will be rather degrow by around 10%. And margin-wise, the reduction in, particularly from export business, will be as low as 40% reduction.
Mr. Gala, the first half did see a substantial amount of weakness when it comes to your stationery products business. And again, this is largely on account of the implementation of GST and the impact. I want to understand is that whether or not we can expect that recovery to come in the second half this financial year.
Yeah, so fourth quarter we expect very good recovery, and the GST impact, which we believed that will really be benefiting the organized sector very soon, that seems to have delayed a bit. And now, as per the plans or the market reports that I am getting, the fourth quarter should be really very good. So overall, in the domestic stationery, which is again 25% of our revenue, there we should be growing around 15% in the current year. And because of that, the major growth will come from the fourth quarter that we are very sure about.
Mr. Gala, do you think the margins from the stationery business, which have been on the lower side, will continue to dilute your overall margins going ahead as well?
So as far as domestic stationery is concerned, this year in particular, there will be revenue growth, not the margin growth. because we are experimenting various other activities to promote sales across India. But overall, as a stationery, the margin would reduce from here because of the exports, which is taking away lot of margins from the total stationery business. So overall stationery, which we were doing around 10-11% EBITDA margin, may come down to around 8% EBITDA margin.
Gala, there's also the case about the NCERT, where it's updated its entire syllabus after 10 years. How will this pan out for your company, since you're primarily into supplementary of books of in the states of Maharashtra and Gujarat?
Unfortunately, penetration of NCERT or so-called CBSE schools in Maharashtra and Gujarat is very low, and therefore Navneet actually does not have any product, supplemental product to the NCERT textbooks. So that will have really no impact to us. Having said that, now the new acquisition that we did, Britannica, now called Indianica, there we are increasing our product portfolio based on the new curriculum guidelines which are being framed. So over next 3 years, we are likely to see very good growth in our subsidiary, which is Indianica.
Mr. Gala, since you're talking about Indianica, that contributed about 6% to your revenues in FY17. Could you tell us what can that number be in FY18?
So again, this year, this being just the first full year of operation for Navneet, we have given only 5% growth in revenue to the team. Subsequently, thereafter, we have very aggressive targets to them. This is the year of consolidation for us, and where we would rather try and consolidate, particularly on manufacturing or printing and logistics. And subsequently, then we will try and leverage various other synergies that we can have. And simultaneously, from next year, with new range of products that we have, we will be able to grow upward of 25 to 30% CAGR.
Right, Mr. Gala, there's also a lot of curiosity with respect to your e-learning business via the digital space. How much does that contribute to your revenue and your EBIT? And have you received any government orders for the same? And if you could also give us a little more in terms of outlook from this particular area of business.
So that's a better question to focus on a couple of years, because in short term, we are seeing that adoption level among the teacher is increasing, but that's not really enough to show substantial growth. But what we have been witnessing is, since the adoption level among teacher is increasing, the adoption level among students are increasing much faster, and therefore Navneet has introduced several B2C products for the market. No doubt, today we have only for Maharashtra, Gujarat, but there are clear-cut plans in next 2 years to roll out for a couple of other states. So we will have couple of B2C products, and from there we are going to see good momentum.
There's been a marked increase that one has seen when it comes to the raw material prices that was seen in the first half of this year. Could you tell us what are these materials specifically, and can we expect some sort of stability over the next few quarters when it comes to the input cost?
So the peak levels of the raw material, which is paper, had reached in March 2017. Thereafter, it came down by around 5 to 6% across board. That has again started moving up, and we have still not reached the peak level which we saw in March 2017. But as per our understanding, the raw material costs are further going to go up. But as a publisher or as a stationery manufacturer, frankly, we are not that much worried. It will be the impact of a raw material hike will be to each and every one of us. And as a normal practice, we always pass that on to the end consumers.
Well, Mr. Gala, that's all I have for you. Thank you for joining us and taking us through the outlook for Navneet Education. But we'll move on to the second trend, and that's paper stocks, which have been trading with a positive bias. And what's really been the key factor that's been aiding this move? To answer this and discuss the prospects of the industry as well as the outlook, we are in conversation with the Managing Director of Orient Paper, Mr. M.L.Pachisia, on the phone line. Thanks for joining us, Mr. Pachisia. Well, I want to start off with your quarter gone by. We have seen growth, it's double-digit growth, but I also want to get an idea of the outlook in the paper industry. What are the different trends that are panning out, and are we looking at more focus on the speciality of the business?
Well, thank you. And secondly, certainly we have added capacity in the tissue paper business, which was commissioned in May 2017. So an impact of that has come in the growth numbers that you see. That capacity is still utilized by about 50-55%. Over the next 6 months, that means by the end of this year, we hope to achieve full capacity utilization. So that is where we are. And I do not wish to talk about the industry as such, but as far as Orient Paper is concerned, we certainly hope to grow in the tissue business, where we already have become the largest manufacturers of tissue paper in India. And as you probably are aware, 60% of our tissue paper production is actually exported. So that is our focus area.
Mr. Pachisia, we've seen a marked improvement when it comes to the paper business. EBIT was positive in the first half versus a negative EBIT which one had seen in the corresponding year. Have there been any increase in price that you've taken? Because I remember interacting with a lot of paper companies start of this year. They were indicating that the demand is coming back, and it was after a lot of quarters that they were increasing their capacity utilization and also looking to increase prices. Just want to understand the trend now. Are you looking to increase prices further?
As far as the comparison with the previous year's first half is concerned, last year we had a shutdown of almost 35-36 days because of water shortage. So that is why you see a marked difference in the turnover for the first half. Although the second quarter also we have grown, but that has grown because of the tissue paper capacity. As far as the paper prices are concerned, actually we passed on two price reductions. Initially, we passed on some reduction because of the GST. Whatever savings we had passed it on to ensure that there is no issue of any undue advantage of GST. And secondly, we did pass on another reduction based upon our reduction in the cost of raw material. So we have passed on two reductions in the prices of paper. However, as of now, there is a major increase in the cost of imported pulp, which we do import for balancing considerations and quality considerations. What the pulp prices overseas, which were ruling at about $500 per ton, have suddenly shot up to almost $800 per ton. To that extent, there has been a cost increase which has happened in the last consignment that we had to import at the higher price. As a result of which, we may be passing on some price increase to the market, effective somewhere 1st of December to middle of December. So that is where we stand. Exact quantum of that price increase we are not yet decided. We will make a actual announcement shortly. So that is where we are. So in fact, in the quarter that has gone by, there has been no price increase. In fact, there was a small reduction, which was because of the reduction in our costs out of our own efforts, as well as on account of better availability of local raw material, which has also come in because of our plantation efforts. We have been doing a lot of plantation in and around our area. So as that quantity increases, there was some reduction in our cost, which we passed on to the market.
Right. So, Mr. Pachisia, that's exactly what I wanted to ask you about, the raw materials cost. So, sir, you have said that there has been a water shortage, which I'm assuming here that could be a challenge going forward. But on the other hand, I've also noticed that your input costs have stabilized considerably, because there has been an increase in your gross margins as well. So if you could now give us a picture about how you're expecting your gross margins this to turn out? More importantly, if you are saying that there has been a water shortage, then how does this picture play out when you consider your input costs as well, which have also seen a little bit of stability and perhaps a decline?
See, the water shortage in the previous year had happened because of two successive bad monsoons that we had in our area. And in order to safeguard further similar situation, we have built additional water reservoirs in our own land. Now we have sufficient water storage, which will last us for almost 4.5 months of no water being available. So no water flow in the river around us, so which we think should give us a fair amount of insurance against future water shortages.
All right.
As far as
Sir, I want to quickly talk to you about your other business, which have recently received approval from NCLT. You're looking to demerge your consumer electric business. I just want to check, are all the approvals now in place, and by exactly when can we see the demerger taking place? I believe the ratio which was announced by the company was almost 1:1. Correct me if I'm wrong there.
No, you are absolutely right. It is exactly 1:1. So, and all shareholders of Orient will receive equal number of shares in the new entity, Orient Electric Limited. And so every shareholder will be treated absolutely equally. As far as time frame is concerned, we have the NCLT approval. Now we are waiting for the stock exchange approval and SEBI approval, which should be available by the end of this quarter. And therefore, during the last quarter of the year, we should be able to list the shares. Of course, these are dependent upon these agencies, how quickly they are able to give the approval. But we do not expect any
Right.
issues.
Just my last question to you. The margins from your fan business have been, we've seen a bit of blip coming about. Just wanted to check if the company is doing anything to augment its margins from the fan business, and also tell us what's the current market share there.
Our market share in fans is about 18%. And the margins are fairly healthy as far as the industry.
So what is the margin? If you could share that number with us?
The margins are in the published results. So the margins as of now is about overall margin, not necessarily in the fan business alone. Because we have four different product lines in the electric business: fans, lighting, appliances, and switchgear. So overall margins are at the moment about 7-8%. But I'm talking of the net margin. But going forward, the other three businesses which were introduced in the last 2-3 years. The lighting business has fully stabilized now, apart from fans, and the other two businesses are up. And so therefore, the overall net margins of the business as such are slightly depressed because of the other new businesses that have been introduced. But we are making good progress in those two also, and once that happens, then we should be at par with the industry average in terms of margins.
Okay, Mr. Pachisia, thanks for joining us and giving us an outlook on the company as well as paper prices along with the input costs. But we'll move on to the final trend that we are addressing, and that is rubber prices, which have been volatile of late, and so has crude for that matter. But what kind of impact can this have on tire and auto companies due to these factors? Well, let's try and understand this, and for that we have an analyst on phone line, Ashwin Patil of LKP Securities. He is in conversation with us. Hi Ashwin, thanks for joining us. Ashwin, firstly, I want to understand, we have seen some amount of volatility in crude, and if I'm not mistaken, crude has moved up substantially, well over 20%, not just on a quarter-to-quarter basis, but also on a year-to-year basis. Is this substantial enough a move for it to have a considerable impact on your rubber prices? And if you could just give us an outlook on what you think of rubber prices as of now.
If you look at the raw material prices of tire companies, then about 50 to 60% is composed of natural rubber, about 25 to 30% is about of synthetic rubber, and rest is carbon black and chemicals and nylon fibers. So overall, if you look at the movement in the crude prices, then definitely this movement which has happened, in the northward direction is going to impact the margins for the tire companies. But if you look at on the other hand, look at the domestic rubber prices, natural rubber prices over the last quarter. The trading prices, if you talk about, which we get from the National Rubber Board website, are in the range of about 130 to 135 rupees per ton, metric ton. And if you look at the consumption prices, which the company gives us during the conference call, they are in the range of 160 to 165 rupees per ton. And they have been quite stable over the last couple of quarters. And going forward also, the management has guided us for a stable movement in the rubber prices in Q3 and Q4. So in the ensuing quarters, we are not worried very much about the movement in the rubber prices, which contribute to the bulk of the national rubber of the raw material of tire companies. Then moving back to crude, yes, that is going to slightly impact the margins. But as we know that Q3 is good and Q4 is also good, so the volumes which happen are quite substantial because of the festive season in Q3, and also cyclically Q4 is a very good quarter for them. So for the overall auto companies as well as the OEMs and replacement, so these companies will be able to pass on the price hike, whatever they will be absorbing from the raw material price increase. So I think that most of the companies will be able to do that, considering the good demand that is there, and hence, the margin impact will not be that significant. That's what we think.
Ashwin, then do you think in the second half margins will be around the same what they posted in the second quarter? Because I guess in the first quarter, because of higher natural rubber prices, margins of majority of these tire companies were impacted, but they came back to normal in the second quarter. What you're suggesting in the second half, we'll see the number to be around what they posted in the second quarter, or there can be any marginal improvement that one can see?
We can see an improvement, that's what I said, because the volumes will be higher.
Okay.
And the overall sales will be good, and the margins also will be good, because the hike that is expected in crude, because natural rubber prices are expected to be range bound in whatever we have seen in the Q2. Slight movement may be seen in Q4 on the upward direction, maybe hardly 1 or 2%, but that also may get absorbed by passing on the price hikes to the customers, because as it is, Q3 and Q4 are good quarters, and volumes happen to the maximum in these 2 quarters. Hence, the impact on the margins will not be that significant. In fact, we think that as compared to Q2, the margins will be better in Q3 and Q4.
Okay, Ashwin, thank you for joining us and giving us an update on those trends. But we'll move on. Hyderabad is playing host to Global Entrepreneurship Summit this time around, and it's got some big names flying down to the city. Donald Trump's daughter and special advisor to the White House, Ivanka Trump's leading the U.S. delegation, while Prime Minister Modi will deliver the keynote address at the inaugural session. Tamanna Inamdar, who is at the City of Pearls, sent us this report from outside the convention sector, earmarked to host the event.
The stage is set for the 8th Global Entrepreneurship Summit right here in Hyderabad. This year's GES is interesting because, for one, it's being hosted for the first time by India and the United States. It's being led by Prime Minister Modi and, of course, advisor to the President of the United States, Ivanka Trump herself. Both have arrived in Hyderabad early this morning. And another key feature of GES this year is that it focuses on women entrepreneurs and how women becoming entrepreneurs can lift communities as a whole. So, for the first time ever, you have over half the 1,200 odd delegates being women, representing their stories and talking about their dreams, hopes and futures. We're hoping to get you some of those stories right here in Hyderabad.
All right, with that, it's a wrap on this edition of Trend Spotting. Thanks a lot for watching the show. Coming up next is Hot Money. Stay tuned to Bloomberg Quint Live.
Are we live?